RIN TV coverage of the 2015 NAPSLO convention is brought to you by the Lexington Insurance Company. Eli Cabañas reporting for World Risk and Insurance News. We're here in San Diego with 4,000 or so surplus lines professionals from the US and the UK for the 2015 NAPSLO convention. We kick off our coverage with Jeremy Johnson. He is President and CEO of Lexington Insurance. Here, he touches on several of the hot topics at this year's meeting, including data and risk modeling, the tropical storm season, and how new capital is affecting the market.
When I think about risk modeling, I really think about data, more broadly than just risk modeling. And then when I think about data, I think just about the transformational impact that data has had on industry in general, whether it's insurance or any business. 90% of the world's data ever created has been created in the last 2 years. And the insurance industry is increasingly revolving around its ability to collect, to aggregate, and to analyze data, and to use really sophisticated tools in order to better price risk, to better analyze risks, to better differentiate risk, to decrease volatility in our business, and to get to a point where we can move away from relying on commoditized capital as our value proposition to risk expertise as our value proposition, and be able to provide real risk expertise to our customers based on an understanding of data and the power of data. We're about halfway through the storm season, and so far it's been benign, and predictions are that it will be a benign storm season. But we're only about halfway through, right? So you think about Sandy. Sandy was right at the end of the 2012 storm season, so we're not there yet. Having said that, no, I don't think that even a big storm would have a meaningful impact on the industry at the moment. We would have to have a truly catastrophic storm to move pricing in a meaningful way. There's a huge amount of capital that's come in. It's intelligent capital. It's modeled risk well. It's not dumb. It anticipates that it's going to have a storm once in a while. I feel pretty good that, at least from Lexington's standpoint, we've got our pricing to a point where we can withstand the vagaries of a storm season. And our offering is an offering that is really predicated upon we know the right price for the risk. If there's a benign storm season, the pricing isn't going to come wickedly down. If it's an awful storm season, the pricing isn't going to go wickedly up. We want to create a stable pricing environment for our customers. And I think that that's what you'll see in the future of CAT. I don't think you'll see this tremendous volatility that we've seen in the past. I think the capital is pretty intelligent, and there's enough capital to withstand, a storm season. So how has the availability of capital, the increased availability of capital, impacted the surplus lines industry? So no doubt there's been a significant increase in capacity, in capital, into the surplus lines market in the last few years. Mostly driven by alternative capital seeking yield in a very depressed interest rate environment. Most of it focused on cat property. So I wouldn't say that in the surplus lines business we've necessarily seen a huge influx of capital outside of that cat property space. In the cat property space, that capital has certainly depressed pricing. It's depressed pricing at the reinsurance level. It's depressed pricing at the insurance level as well. I think the risk that we face as an industry is allowing ourselves to be commoditized, allowing ourselves to simply be associated with capital. But we're far more than that. We are far more than that, and we can be far more than that. And that, I think, that's what we have to make sure as an industry that we realize. We've got to be focused on what is the true value that we can provide to our customers. It's not just capital. It's the ability to understand their risks, understand how their risks are changing, to develop new product to address those risks, to develop new services to address those risks, and to really move ourselves away from commoditized capital to a provider of risk expertise. For us at AIG and Lexington, we've invested in an enormous global platform of engineering capabilities in order to provide our customers with a service proposition, a value proposition that's broader than simply a balance sheet and capital.
In part 2 of our discussion with Lexington President and CEO Jeremy Johnson, he'll address recruiting and retaining talent in the industry and the importance of innovation. So keep it here for more of our coverage of the 2015 NAPSLO convention right here on Grin TV.